930 or below 930, I simply suggest use 1:2, because if you keep your trading as much as mechanical possible, you will remove the guessworks. 2. Alright, so it took so much time, around 12 o'clock it gave our target. So today in this video I am going to show you a simple day trading strategy which you can use in indices, and you can trade it. And for this you do not need any kind of daily bias or market deep knowledge. It is very simple mechanical rule based strategy. It happens almost every day at 9:30 a.m. The reason is because indices open at 9:30 a.m. and when indices open at 9:30 a.m. 80 to 90% time the first leg is the manipulation leg. So the strategy is pretty simple. What we are going to do is we are fading the manipulation move. For example, if market open at 9:30 a.m. and it is running at below, means market making lower lows. So what we are going to do is we will try to catch the opposite of the move, because price will grab the sell side liquidity, and 80 to 90% time the first move is the manipulation move. So the goal is to simply capturing the manipulation leg. Similarly, if the market making higher highs and price open at 9:30, so what we are going to do is we will try to sell the move, because the first move is manipulation, and if the market making higher highs, the chances are price will trap the bulls, and if the price is making lower lows, the chances are price will trap the bears. So we call it bull trap and bear trap. So if you are new to my channel, let me introduce myself. My name is Harsh and I am a full-time trader since last 5+ years. So you can trust me whatever I am saying. Also you can check out the strategy on yourself, collect the data, so you will understand what I am trying to say, and you will find this strategy works pretty well. So let's start the video. Let me teach you in theory first, then we will see some examples on the chart so you will get the complete clarity. Alright, so let's understand the theory first. So we are going to use 15-minute chart in this case. So what we are going to do is switching to 15-minute chart and marking our two most recent liquidity. So for example, if the price is falling and this is our 15-minute chart, what we are going to do is marking our two most recent liquidity, and then we will wait for the 9:30 New York time to open, and what price will seek first, we will fade that move. So for example, this is our 9:30 line and price opened and price took sell side liquidity first. Then we are going to 1-minute chart and wait for structure shift or FVG to form, and then we will simply take the entry. Most of the time we do not even need the structure shift. What I mean by that is simply, let's say price swapped sell side liquidity in 15-minute chart and then we switch to 1-minute chart, and sometimes the shift happened at very high. So what we need is simply FVG is enough inside the range so we can take the direct entry. Similarly, if price is going higher high, this is our 15-minute chart, what we are going to do is mark out our liquidities area, sell side, buy side. Then 9:30 market open. For example, in this case price swapped sell side first. Then what we are going to do, simply switch to 1-minute chart and wait for shift and with displacement for our entry, and simply targeting 1:2 or whatever the nearby liquidity is available. So I hope you understand the theory first. If you are watching this first time, obviously you will not get the complete clarity, so let me show you some examples so you will get the complete clarity, because clarity is very important in trading. So let's switch to the charts. So here we have our NASDAQ 15-minute chart. This is our 9:30. What I told you, we will mark two most recent liquidities. So in this case the two most recent swing points are, this is swing low, this is swing high. Price at 9:30 swapped buy side liquidity. Simply we will switch to the 1-minute chart for our entry. Alright, now this is our 9:30 This is our 1 minute chart. So what happened here? Price tried to break a swing low, price tried to break a shift, but it failed because there is no displacement. Displacement means fully body closing. Again, in this case, no displacement. And then finally we have our displacement. Now this is a fully body closing with a fair value gap in it, so it means it is a perfect entry. Simply sell, stop our swing high, target simply 1:2 or 930 or below 930. I simply suggest use 1:2 because if you keep your trading as much as mechanical possible, you will remove the guessworks. Alright, let's see some more examples. Again guys, here is another example too, NASDAQ 15-minute chart. This is our 930, as you can see, Monday 14 April. So what we will do, simply mark our two most recent swing highs. This is swing highs, this is swing low. Alright, what price did? Simply swapped sell side liquidity. Your goal is to switch to 1 minute chart after grabbing the liquidity, and yes, for grabbing liquidity, price needs to close with wick. If price close with body, do not use it. That is not a liquidity grab, that is a break of structure. Then this is our 1 minute chart. Here in this case, price made a shift, but it is not displacement. Then we will wait for displacement. In this case we got the displacement, fully body closing with fair value gap. Simply long the entry, SL below swing low. And in this case, if you target 1:2, price didn't go to 1:2, and around 11 o'clock it hit our stop loss. So what I would suggest you, whenever price reach to 1:1, you can simply put the trade into break even. This will save you so much money because sometimes price do not give 1:2, it give 1:1.5, 1:6, and then hit your break even. So if you do not use break even, your win rate will drastically fall. So yes, you can use the break even, and it is very important. Let's see some more examples. Okay, here is another example, NASDAQ 15-minute chart. Simply, you do not need any kind of structure knowledge on all of that bias. All you need is simply mark your swing low, swing highs. So swing low and swing highs. Now this and this is a build up, so we will going to use major point. So now see, this is very important. This is our 930. 930 didn't wicked any liquidity. Now price wicked at 10:15, does not matter. The goal is to trade after 9:30. Sometimes 9:30 wick do sweep, sometimes 10 AM, sometimes 10:15. Simply switch to 1 minute chart after the sweep. Now wait for the displacement. This is our sweep area. Let's wait for the displacement. Now in this case, price made a shift with the fully body closing. So simply we will do long, SL below swing low, target simply 1:2. Alright, so it took so much time, around 12 o'clock it gave our target. Okay, let's see one more examples, and I will try to show you bearish examples so you will get the both side clarity. So guys, here is another example of bearish side. Here we have 930. Simply what we are going to do is marking our swing high, swing lows before 930. So here we have our swing low point, and here we have our swing high point. Sometimes the point will get into left, sometimes into the right. What do I mean by that is, in this case, the swing high point into the left side means old data, and sometimes you will get the swing high point into the right side. Okay, then this is our 930 opening, price swept liquidity. Simply switch to the 1 minute chart for our entry, right? So here price swept. Now wait for the displacement. Here we have fully displacement with body closing. Simply click to short position and take your trade. Target simply 1:2. If you miss the first entry, no worries, wait for the another break, fully displacement with fair value gap, take another entry. target simply 1:2. The bearish side works very well because bear position happening with force and bull positions taking times because it required build up, but whenever price fall, it fall pretty quickly. So let's summarize the video. The strategy is pretty simple. All you need is wait for 9:30. All you need is wait for 9:30 time, and before the 9:30 opening, all you need is to mark your swing highs, swing lows. Whenever price swept swing high, you will look for sell entry. Whenever price took swing low, you will look for buy entry. The reason is pretty simple. Every swing high has a buy side liquidity and every swing low has a sell side liquidity. So whenever price grab buy side liquidity, you will look for sell at 1 minute chart. Whenever price took sell side liquidity, you will look for buy at 1 minute chart. So that's it for today, guys. If you like the video, make sure subscribe the channel and leave a comment. It motivates me to make more videos. Thank you for the watching.